The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all. Am I there? And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more into the breach do we go, dear friends. As we start off the show today, 1990 on the S&P cash. We're off 25, almost 26 points. Volume's just a little less than it was yesterday, just under 2.4 billion shares. And we had kind of a little bounce out here this morning. You tried to get it up to about 2,000 on the S&P cash. Not a lot of juice out there. And I don't know, I keep hearing funny sounds back from the board. So maybe someone can tell me whether they can hear me well in the den. But all I have is you are in the, for the engineer. I don't know what that means. Anyway, very interesting day out here, of course, so mostly reacting to the news out of North Korea. And I was wondering how long it would take until the incredibly ill-informed started piling on. Normally, I wait a couple hours and fast forward through CNBC to find who will be the first one to say something incredibly stupid. It was Simon Hobbs today. And the reason I think he normally these guys all travel in the same circle, and the first person to say something stupid just passes it on. Today, the thing that I think is probably fairly stupid is they're questioning whether or not the bomb that North Korea said that they sent off last night was indeed a bomb and a hydrogen bomb at that. There's some great videos from a outfit called the Balfour Institute. They give most of the leaders of our countries the how can I say that? The executive summary of nuclear energy. You can find them on YouTube, and it runs, they've got two different segments, but it's basically everything that they tell senators, congressmen in the foreign affairs committees, all the way up to the president. Of course, not any of the stuff that they can't tell us, but all the basic background of what and how nuclear energy for destructive purposes is used. And if you need that link, you can't find it, just email me at path@tfnn.com. I put it in my newsletter this morning. But this is kind of interesting because I think a lot of people are trying to whistle past the graveyard on this one. We know that in 1992, the QCon guy from Pakistan was running around trying to sell bomb designs that he somehow got from the Russians after the fall of well, what do you call it? Fall of the Soviet Union. And that everybody pretty much knew exactly what went on. But kind of the skepticism that someone couldn't make a hydrogen bomb is almost laughable. There is the gentleman who is a truck driver who just likes reading about nuclear energy in his spare time, built an exact replica, a working exact replica of the bomb that blew up Hiroshima. In fact, the powers that be came by and asked him to change a few things so people couldn't just duplicate what he'd done. All of this is open source. And kind of the stupid part is to think that someone couldn't build a hydrogen bomb. That's not really the tough part. The tough part is getting the material to put in it that goes bang. That, like I said, that Balfour Institute gives you exactly what's going on. But one of the best parts of the second part of their presentation is this IEA inspector who went all over North Korea and was showing all the pictures they had of North Korea. And one of the funniest parts was this new facility that they had was kind of interesting because if you looked all through North Korea, you saw all these brown buildings, brown ceilings, brown roofs. There was one building in all of 20 miles that had a colored roof. And guess what? This was the one that they took them to show just how they were processing all the materials that they would need for a hydrogen bomb. And this is several years ago. So there's one of two things. Two, we have satellites circling the globe. We knew within about 5 seconds whether or not this was an atomic bomb or a hydrogen bomb. So the whole idea that we have to wait until gases wander around and float off to the into the Pacific to find out whether they launched one too is somewhat laughable. But you know, everybody's got to spin everything. I'm not exactly sure why they just wouldn't come out and say it, other than the fact that this may look make the deal with Iran look almost laughable. But I guess on a day like this, we can just thank the Secretary of State from 1999, where they just kind of laughed off North Korea actually having something. Of course, they have missiles already. This bomb blast yesterday is pretty much from open sources thought to be the test of a hydrogen bomb that could go on a missile. Those missiles can already reach pretty much to Las Vegas, Salt Lake City, all the way up to Redmond, Washington, and all the way down to Los Angeles. So just another bright spot on a world kind of spinning out of control. But yeah, the AQ-Con. So we know all about whether or not they could design one. If a truck driver can make an atomic bomb, I suspect that a nation like North Korea, with 20 years of work and what is it? Almost 25 years of work, probably could figure it out. And very interesting stuff. Anyway, I'll post the links during the break in the den. Anyway, it's all just a little bit of history repeating out here. So let's get this party started.
And it's all just a little bit of history repeating.
On this day in 1982, yeah, this is right. On this day in 1982, the Business Cycle Dating Committee, these are the guys that say whether or not you're in a recession or not, come out and say that we're in a recession. Of course, they only tell you whether you're in a recession probably about the time that you're going to come out of the recession, and that's exactly what happened on this day in 1982. They came out, told everybody what was self-evident, and of course, 6 months later, we're off to the races. We'll be back in a minute. This
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're back. You can give me a call at 877-927-6648. You can email me at path@tfnn.com. And, of course, you can always post a message in the den, and we'll get to answer it. Had a few emails earlier in the day, and I wanted to answer them on air. Thought that they were interesting. But first, I wanted to let everybody know that if you're a subscriber to either one of my newsletters, The Path of Least Resistance, or The Tech Insider, I'm going to have a subscriber event on the 20th. And we're going to be talking about using one of my new tools, using the actual short volume each day. And I think we're going to have a white, kind of half a white paper go out before it. And then I'm going to have one for my subscribers, a bigger one, probably next Wednesday, to go out. And then, of course, on the 20th, I think at 5:30, we're going to do the subscriber event anyway. So lots of interesting stuff coming your way and other things going on. Guy was asking me this morning whether or not I could cover the short. They thought, well, maybe this is just a second test of the lows and that we should get out of our shorts. We, of course, went short in both newsletters Wednesday of last week. So now we're on to, I guess, our first week of these shorts. But I have a feeling these things are going to last a great deal longer than most people think. I had two comments. He called me earlier today, and we had two comments. One that I had to think about was, now, let's say that there was a 75% chance that the right thing to do was continue holding our shorts this morning. The question is, do you reward yourself when you're just right or when you do the right thing? Since the odds are overwhelming odds, are probably more like 80%, at least that's my estimate, that we are going lower, not higher, before we get a significant bounce. There's also the idea that we've gapped down twice, and almost always you get 80% chance that you gap down the third time. So I'm going to be holding for that third time gap before I even contemplate getting a first gap down. A low to actually cover my shorts on. But the question, anyway, I was talking to this poker player, probably 10 years ago. He said he only rewarded himself when he did the right thing. Whether or not that he won the hand, did he do the right thing with all the information he had? And if he was going to go out and spend money or buy a new car or do anything else, it didn't have to do with whether or not he actually won, but that he did the right thing because he knew if he did the right thing long enough that the winnings would come. And the other thing is that I think a lot of people want to cover their shorts a lot quicker because, of course, the money comes a lot faster. But all I could hear in the background was what Jesse Livermore said many years ago in his reminiscence of a stock operator. And that is the successful trader has to fight these two deep-seated instincts. He has to reverse what he might call his natural impulses. Instead of hoping, he must fear. Instead of fearing, he must hope. He must fear his loss may develop into a much bigger loss and hope that his profit may become a much bigger profit. Also, I didn't see anybody on CNBC that was telling everybody that the end was nigh. That's normally when all hope is lost is when I decide that it's probably time to cover. I didn't see any of that out there this morning. And while we might bounce around these levels for a while, my guess is that we get one more big gap down before we can even say that the ABC on an ABC down has started. Another comment in the den that I thought was very interesting. Someone was talking about actual Starbucks buying back shares as things were getting worse and already knowing that they were going to be subpoenaed on their food issues. And I could only think, I don't know about Starbucks instantly, and I'd have to go back and dig through it. But I'm pretty sure it was Bloomberg did an article maybe 6 months or a year ago. And it found out that when you see these giant numbers of we're buying back $5 billion worth of our stock from a company X or whatever, that normally just about 10% of those shares are actually ever bought back. The 90% of the shares they say they're going to spend $5 billion on hardly ever are. The idea that they have $5 billion that they can but don't have to buy back is more of a threat to keep shorts out, which they do not like. Generally, they do buy back some shares, but you will find out that almost always those ends up in the pocket of the CEOs and executives at a much lower price. It's a way to kind of have a slush fund and pay off the CEOs, of course, themselves. It's almost, boy, if it was the mob, you'd just say it was crooked. Probably is. Anyway, didn't really change the slide. But again, when I just think about covering my shorts, I go back to the the book, Reminiscence of a Stock Operator, and think that his explanation is probably the best. And that is when I see total demoralization. And again, you know, everybody's saying the end is nigh on CNBC is probably one of the best indicators that's really when I do it. And I'm reversing my natural impulses today to cover my shorts and take my big winnings and hope that my shorts become a much more profitable short. Anyway, give me a call, 877-927-6648. We're going to look at a couple of stocks here, get into that part of the business a little sooner than usual. Who depends what the right thing is? That's a good question at Chipotle. But that's it. Yeah. Anyway, what else do we have going on? Let's get some of these charts up that I was looking for earlier, and we'll get them started out here. Now, these charts so far haven't really fired me up because it takes probably about a week to really get things started back after a Christmas vacation, where we really start getting some good indication from some charts. A lot of people are still getting back to the market. They're still on extended vacations, and we really start seeing what's going on now. Some of the stocks that I'm looking at out here with lower volume are some of these stocks that have been at much higher highs, but now are kind of getting down. A lot of the stocks that I think people are going to want to go after, like the FANG stocks, to me look like those are the ones in the ABC downs. The ones that have already completed multiple ABC downs tend to be the ones that look like they have the lighter volume and are pretty much given up everything that they're going to give up. Beeve Aerospace in the airplane parts business had a low of 2.5 million shares on December 15th, $40.39. It hadn't gone through that, but we are in that candle. I'm just noticing that this one with 2.5 million shares back on the 15th has about 4 million shares now. So as we look at some of these, I am thinking that maybe we're going to see maybe a little bit stronger IWM and maybe a weaker S&P going forward. Well, we're headed into earnings anyway. We'll be back in a minute.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're back. Anyway, we're looking at Beeve Aerospace, but there's some of these stocks out here, but these things are already way off. In fact, yesterday, when everything was getting slammed, and the day before, when everything was getting slammed, we've had some of these stocks that were down here with fairly light volume actually do fairly well, and that means that it's not that these things are instantly going to rocket back up to previous highs like 3D systems, but it does look to me like we've got some of these things that are probably through going down. And I think it's more of a sector issue. That is that we're probably going to see more weakness in the S&P and in the NASDAQ than we're going to see in something like the IWM in the near future. And that's just, these things are, they were $90, $97 on this one. It's now in the $8 and $9 range. I mean, at some point, either these things have cash or they don't. In the case of 3D systems, they had some fairly decent money and no debt. So it's not like some of these things, at some point, these things are going to look fairly attractive unless their business is totally bogus, which since I see their products when I go around, I know that they're selling something. So the question is just what is the value of the company, not whether or not they're going out of business tomorrow. But in the same sector, which we spent a lot of time on, I think X1 had earnings out here, but it didn't really do much for it over the last few days. Yeah, you also look at SSYS, but it's, again, when you've had destruction like you had in this one, we were shorting Stratasys, I think, at 130 at one point. Now the thing's in at $22. I'm not thinking about shorting it down here. Time to short is when stocks are fairly high, not after they've been beaten down 90%. But a lot of these stocks, after they get beaten, will have, of course, what Wyckoff called the automatic rally. That is the first automatic rally when the volume goes light and you pop. And actually, we tried to play this Stratasys in one of the newsletters, and I think we ended up breaking up even. It didn't do that much. It was a last-minute options play. But it is kind of interesting. But once you get that first automatic rally, normally you want to look at the time frame where these things came off the top. And I think we got to even go back a little bit further on this one. But September 18th of 2014, so what, we're a little bit into a year, in what are we going to call it, year and 3 months since the highs. And you kind of have to look at these right-hand side of the charts after these things have been creamed. You're going to get like an automatic rally. Then what you really look for is these things that just have continuing lighter and lighter lows. And a lot of times, if you got, like we said, it took a year and 3 months for this thing to come down here to these lows. It's not going to be 1 week and everybody just comes back and buys them. The idea that everything is a V bottom is probably the exception, not the rule, and especially the rule when we look at stocks that have come off huge prices. But if the market really got nasty, could we see these lows broken with higher volume? The answer is yes. But normally these are bad risk-reward scenarios, especially when you see a day like this where we got 612,000 shares in Stratasys. So, interesting to the least. Let's see what else I have in my list of stuff. There was a few out here. GNRC, Generac Holdings. We had kind of a little pattern out here. It's not a huge pattern, but fairly interesting to me. And this is, especially after a stock comes off a high, kind of interesting to me. But I really kind of like the bottom that this one's making. Now, this is a stock where you have to either have some really horrible winter weather where everybody loses their electricity for a while. We played this once, and I can't remember if this was the gap that we played, but I kind of remember that this might have been it. Yeah, I think it was this October 28th gap, and that was it. And then the thing literally fell apart in a few days. But we made some quick money. The market pretty much tanked, I think, in the next couple of days, if I remember the trade. But not a bad-looking trade setup out here in that it did gap up. It did so with a sign of strength and volume. And now we're back into some of these, or at least into this gap. But that thing gapped up with 5.3 million shares the first day, and on the second day back to 2.7 million shares. That we have 400,000 shares as we're going and filling that gap. Gives you a pretty good indication that at least some of these stocks less well known, not the FANG stocks, not the ones that are always on CNBC, are at least coming back. But if we had a real bad El Nino, or as I like to call it, El Reno, weather pattern out here that really caused, 6 inches of ice all over the Midwest or something, you might want to keep this one in your quiver. It's certainly, the risk reward has gotten a lot better out here. You've had your first sign of strength off the bottom, but could we? To me, I guess without a big weather problem, you're probably looking back into springtime, and as soon as hurricane season starts around June down here in Florida, I'll be keeping a razor eye on Generac. It's especially for a quick move on a storm, always one of the great stocks to take a look at. Again, you can email me at path@tfnn.com, or you can give me a call at 877-927-6648. What else was on my list of stuff out here? Better check in on the markets here. If I get too distracted, I'm showing a 1992 on the S&P cash. So we're 6 points above the previous low. Let me just make sure that I update these. Yeah, pretty quiet. 2.6 billion shares on the consolidated New York Stock Exchange tape so far. WTW. Weight Watchers. Now, I saw somebody in the den just posted about Weight Watcher. I saw that she was, Oprah was on TV last night hawking it. So maybe we got a little bit more movement in that. Question I have is, she's been on 20 diets. I wonder how far that diet goes before she breaks it, and maybe Weight Watchers has a problem. It's kind of like having, anytime you have a big celebrity, it could be good, or it could be Jared from Subway. Ugh. Or it could just be somebody that goes on a diet and doesn't keep it. Kirstie Alley, I remember she was hawking one of those diet systems and lost like 100 pounds and gained back 80 of it. What can you say? Jared the perf. Anyway, Generac Holdings. Let's look at some other stuff out here. I've got to get back to it. I was pretty busy today. Workday. I haven't looked at this one for a while. Wanted to look at this. Now, this one came off its low of April 28th. We're going to the break here. But had a nice test of the lows on lighter volume. It's come back up. I don't think this low had light enough volume. I think maybe we're going to get another test at $65. I'm going to tell you why I love this company when we come back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And we're going to go to John in Boston. How you doing today, John?
I'm doing well. I'm curious about your newsletters. I'm not really clear as what the difference is between the two of them. I noticed you just said something that a particular stock you mentioned in both letters.
Yep. The difference between the longer-term newsletter and the shorter-term one is that the trades are not probably going to move as fast in one as the other. If you can't be in front of a screen all the time or close to it, this is the way I put it to most people. If you can get in and out of a stock in the next hour or two after you get our email, you'll be fine with my daily newsletter. If you can, if it's going to take more like for a day, like you're in meetings all day, and whether or not you can be in one, then you probably want to go to the longer term newsletter. So the big difference is whether or not you can put some of these stocks in an IRA or something like that you may not be able to get in and out of before the end of the day or the end of the week. The idea is that there are much fewer trades, but they've set up for a lot longer and probably have a much better chance of not getting you stopped out instantly, like some kind of day trade, right?
It sounds better for me because I can follow it pretty quickly.
I do some longer term and shorter term newsletters. I mean, we do both, but and of course the one is only technology, the longer term one, but that's what I specialize in.
Right.
So either one of those newsletters will get you you can get for 30 days free. Go to the front page of TFNN and it will set you up for our webinar on January 20th.
That sounds good. Okay. Thank you very much.
Thank you, John.
Bye-bye.
Your check's in the mail. Thanks, John. Anyway, we were talking about Workday before our caller. You can call, too, at 877-927-6648. But I love this company, and I've talked about it a few times before. I'm hoping this thing gets back down to 65 before we find a low. A lot of people not familiar with it. There was a giant war 10 years ago. I'm going to call it 10 years ago with a company called PeopleSoft. Oracle wanted it, and there was no denying him. He went around the CEO and CFO until they got it. Not exactly sure how all this infighting from boards and everything else works, but I guess if you have enough investors that want to jump ship or want to take the quick cash, you can get it done. Anyway, the CEO and CFO, of course, left after the coup of PeopleSoft. PeopleSoft was a very good company, made a lot of money. Oracle bought them. And, of course, these two guys left. Now, what they've done is create a company called Workday, and I really like the idea of this company. What they do is kind of the equivalent of Paychex. That is, they take care of all the software, but Paychex does it all for you, everything. You just get all the paychecks in the mail and you hand them out to your employees. Workday lets your employees at your local site enter all the data and set stuff up. All they do is make sure that all the software is compliant with local and regional and federal regulations, and still let your own accountant basically do stuff. But they handle, all the jurisdictions, the sales tax, payroll, all that kind of stuff that you would need. But it's all done in the cloud, so there's no real software that needs to be installed on your machine, as far as I'm understanding the company. And I think that that's pretty good. Now, you had the first test of that $64.21 low, April 28th, at 64.21. You came down, but you didn't pierce that low. There's probably about a 90% chance that that does get pierced. So I really couldn't buy it off that low long term. But if it gets back down into that 64.21 area and all the volume comes out, this is one company that I think could do well even in a declining economy, but you would have to buy it right. And I really like just the guys are extra sharp guys at the company. Normally, I don't really care who's running the company or whether they're my friends, as Jim Cramer always has his friendly CEOs. Normally, he's buttering them up so that they'll appear on his television show. Then he'll viciously attack them when the company seems to tank. Speaking of Jim Cramer pumps and dumps, haven't looked at CCR in a while. Let's take a look at that. Where's it? CRR. Come on. Did I get it? Is it CRR? Carbo Ceramics. There it is. One of the big pump and dumps by our favorite guru, Jim Cramer. And of course, if I mention his name, we have to say it.
Bring me the head of the false prophet, Jim Cramer.
Anyway, I always have to play that sound effect. Anyway, the Carbo Ceramics is one of the ones that he pumped up to the top. And the only thing I hate is the fact that I didn't short it. His pump and dumps are some of the best money that money can be made. But at some point, even these pump and dumps find some kind of low. The Carbo Ceramics, of course, did make these beads that were used for fracking. And of course, once the whole idea of fracking started downhill, this company was probably headed downhill too. The second thing was that people figured out how to use regular sand. They didn't have to always use this Carbo Ceramics beads to keep the cracks in the wells for fracking open. Now, maybe you could make a case that this is at least starting to find some kind of bottom with the bottom of the market. The October 27th low, $15.51, had about 1 million shares. We got into that on, December 21st with fairly light volume, 700,000 shares. Of course, that's the week before Christmas. You're going to get light volume anyway. What you really want to see that comes back down now that the volume is looking fairly brisk in the markets again, and not too bad today, 300,000 shares. Now, like I said, can we still break out some of these lows on some of these stocks? The answer is yes. I'm not going to be shorting a stock that was $156 on July 1st of 2014, now that it's $14. In fact, I have a pretty good rule, and that's some of the stuff we'll be talking about that in that webinar on January 20th, back in there. But anyway, just kind of interesting out here. But I'm kind of starting to see a lot of these stocks that have just been absolutely eviscerated find a low. And I suspect now that these stocks have pretty much been creamed into earnings, the next ones we're probably going to be looking at are the big ones of the market that are going to get creamed. And of course, in the meantime, while we've been talking, the S&P fell off a cliff. We're down at 1981, down $35.64. I did the right thing today and not cover my shorts. And guess what? I'll be able to reward myself for doing the right thing. Even though I did win this time, either way, I may have gotten an ice cream cone or something else just to positively reaffirm that I do the right thing, whether or not I win or not. We'll be back in a minute.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
There's some news coming out that is semi-market related, but I think very interesting. And as the market plummets, 1981 on the S&P cash, maybe a good way just to end up the show out here today, because I don't think that there's any real signals out here that say that I should short. In fact, I still think we have one more gap down. But just out is Nate Silver's Super Bowl prediction. If you don't know Nate Silver, he's kind of the guy that really invented Moneyball in baseball. He was a very smart guy, also predicted the elections within like 0.25% for the last elections, and is very good at figuring out how to truly do surveys and other things that actually truly end up being somewhat close. A lot of people, in fact, I would say that maybe half of every kind of survey or anything I see on news is manufactured. A lot of the questions are, do you beat your wife still, kind of things. And that means that, of course, the survey was really they were looking for an answer, and they asked the questions to get the answer that they wanted. He's very good at it. It's got a book called, what's the name of that book now? Nate Silver. It's all about predictions and why some predictions are extremely good. Oh, the signal and the noise. He's got a great prediction out there. I don't follow football, so I don't know whether the Carolina Panthers are that big of favorites or whatever in his article. I do know that he basically is one of the, if you want to talk about the difference between fundamentalists in trading and also the technical analysts, he would be a technical analyst in football or baseball. He's been very good. He's had a big website for a long time where a lot of people follow it in sports, but he's been very active, of course, in politics. But he's been accurate, which is one of the weird things. Anyway, his book is all about why some predictions fail and why some do not. And he's got even though he's got an agenda of his own, we all do, he does a pretty good job of stamping it down and figuring out what's it. I don't care who wins the Super Bowl, but just kind of interesting to see his predictions come out. Going to see what else happens, but interesting nonetheless. Let's look at Apple just before the end of the day and see what else has happened. We were talking about yesterday with one of the callers about, or was it the day before? All these days seem to get mixed up, about whether or not they should buy any of the suppliers in Apple. I said, yeah, this technology really seems to be on the right-hand side of the chart. Oh, I forgot to get that chart. I've got it on my notes here. We'll get it tomorrow, and I'll show you the bell curve of technology and technology adoption. I put it in my Tech Insider many times, but I forget sometimes not everybody sees it. Anyway, on Apple, kind of pretty much on the far right shoulder of this technology. They need something else. But we were talking about Avago. It's down. It's got a little hammer out here. You know, can this thing do an ABC? I think it can. But certainly the stock is acting like it does want to test that August 24th low of $92. And my guess is that's probably where I'll be covering my shorts. But we'll have to see. Your mileage may vary. Avago, as I said to this guy, this thing looked like it was going to fill this gap. Pretty much came to that today. In the meantime, sell when you can, not when you have to. Cover when you can, not when you have to also. And we'll see you here tomorrow. Same bat channel, same bat time. Hang on for Tom O'Brien.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.